Double the profitability? Nate, I read the Walgreens press release 3 times looking for the punchline. It's a $10 billion bet on a pharmacy chain that feels like a ghost town.
You're completely ignoring the real estate angle. Private equity sees a massive turnaround canvas here.
A canvas of expired greeting cards. And meanwhile, KKR just dropped $2 billion on Nothing Bundt Cakes.
Hey, don't underestimate high margin frosting.
$2 billion for cake, $10 billion for a broken pharmacy. Let's look at the actual math on these buyouts. The rundown.
$2 billion for Bundt Cakes, Maya. $2 billion.
I read the press release 3 times to make sure I didn't add an extra zero. But look at the margins on those things. It's literally flour, sugar, and a franchise fee.
Still, KKR is throwing around serious cash this week. They just closed their North America Fund XIV at $23 billion. You have to deploy that somewhere.
Sure, but you don't just buy a bakery chain because the cash is burning a hole in your pocket. They just sold CoolIT to Ecolab for $4.75 billion, so they're flush. But $2 billion for Nothing Bundt Cakes? I need to see the unit economics. Analysts are calling it a play for high-margin niche food, but that multiple feels completely detached from reality.
Spoken like a true skeptic. I actually think it's a brilliant play. You get consistent, predictable franchise cash flows. It's basically recession-proof. People still buy cakes when the economy tanks.
People buy grocery store sheet cakes when the economy tanks, Nate. They don't buy $40 premium frosted Bundt cakes.
We're going to have to agree to disagree on the macroeconomic elasticity of frosting demand.
Fair enough. Moving on to things that actually cure people instead of causing cavities. Merit Medical is picking up Viewpoint Medical for $140 million.
Expanding the oncology portfolio, smart, clean, bolt-on acquisition, classic Merit.
Exactly. Also on the closed deal front, Gallo officially finished acquiring 4 Roses Bourbon from Kieran Holdings.
Excellent, Poor. Speaking of things dragging on, though, Gilead is playing the waiting game again. They just extended the expiration date on the Arkelix tender offer.
That drama is never going to end. Just like the Aurinia Pharmaceuticals and Kezar Life Sciences integration. We should see some regulatory filings on that tomorrow.
We'll also see how the market reacts tomorrow to Allied Gold shareholders finally approving the ZGene takeover. But my favorite gossip right now is in the beauty sector. The whispers about Estee Lauder and Puyi are getting very loud.
They're advancing talks for a massive merger, right? But the rumor is it's predominantly stock-based.
Mostly stock, yeah, which makes sense for a deal this size.
I hate mostly stock deals in the beauty space right now. The public valuations are a mess. If I'm Puig, I want hard cash.
You always want cash, Maya, but stock lets them ride the upside if Estee actually turns things around.
That's a massive if. Speaking of massive turnarounds and highly questionable timelines.
Oh, here we go, the big one.
$10 billion for Walgreens, a private equity buyout, and the new ownership group is already claiming they'll double the chain's profitability.
In this retail healthcare landscape, I have a lot of thoughts on those projections. The big one.
$10 billion for Walgreens. I keep reading the number and waiting for it to make absolute sense.
Oh, come on. It makes perfect sense if you look at it through the classic private equity lens. You buy a distressed legacy brand, you find the operational fat, and you carve it out.
Carve what out? Nate, they are promising to double profitability. Double it. In a retail healthcare market that is currently treating profit margins like a suggestion.
Look, they have thousands of prime corner lots. The real estate alone is a massive safety net. The new ownership group isn't looking at this as just a pharmacy. They are looking at a real estate portfolio that happens to sell greeting cards and bandages.
I read the press release. They are definitely still pretending to be a pharmacy. Market watchers are openly laughing at this timeline. You can't just spreadsheet your way to double profits when your core business is dispensing drugs. You're getting squeezed by PBMs on one side and Amazon on the other.
You sound like a short seller.
I sound like someone who actually reads the footnotes. Have you walked into a Walgreens lately? Half the merchandise is locked behind plexiglass. You have to press a button and wait 10 minutes just to buy deodorant. That is not a growth engine.
Fair point. I had to ask a manager to unlock a $12 bottle of shampoo last week. Made me feel like I was buying uranium. But the PE guys know this. That's exactly why they bought it. They see a completely mismanaged front-of-store experience.
So their brilliant $10 billion plan to double profits is unlocking the shampoo.
Hey, don't mock the shampoo alpha. Seriously, though, they strip out the unprofitable stores, they renegotiate leases, they probably spin off the clinical side entirely and lean into the convenience model.
I'll believe it when I see the actual filings. Right now, 10 billion feels like a massive overpay for a company that operates like a very sad convenience store with a waiting room attached.
Spoken like a true tech skeptic, but clearly private equity just has cash burning a hole in its pocket right now. I mean, look at what KKR is doing.
Right, they just announced the final close of their North America Fund XIV, $23 billion in fresh powder.
Exactly. And while this Walgreens group is out here trying to save retail pharmacy, KKR is spending $2 billion on cupcakes.
Nothing Bundt Cakes, to be specific.
$2 billion for cake, Maya. Analysts are pointing out the obvious high margin, niche food franchises. Honestly, I would much rather buy the cake than the pharmacy.
I actually agree with you on that one. The margins on premium frosting are way better than the margins on prescription cough syrup.
Speaking of sweet deals and high margins, the beauty industry whispers are getting really loud this week.
Oh, the Estee Lauder and Prig talks.
Predominantly stock-based, massive merger potential. We need to unpack those rumors right after this. Voices. So the consensus from the analyst desks this morning on the Walgreens deal is basically polite disbelief. One note literally just said market watchers are expressing extreme skepticism over this timeline to double profitability.
Extreme skepticism is putting it mildly. You are talking about a $10 billion buyout in the middle of a retail pharmacy meltdown. You cannot spreadsheet your way to double profits when your core business model is being squeezed by pharmacy benefit managers.
Look, I've written these pitch decks. When you buy a distressed asset for $10 billion, you have to promise the moon to your LPs. You come in / corporate overhead, optimize the real estate footprint. It is classic private equity.
Oh, please. You think optimizing real estate is going to magically generate billions in free cash flow? What are they going to do? Sell more greeting cards? The math does not work. Show me the actual operational plan.
Fine, or you want a private equity deal with actual margins you can understand? Let's talk about the quote of the day. Industry analysts are highlighting KKR's continued appetite for high margin niche food franchises.
You mean the cake?
I mean the cake? KKR is buying Nothing Bundt Cakes for $2 billion.
$2 billion. I read the release 3 times looking for a typo. It is literally just cake with cream cheese frosting.
Do not underestimate the frosting. And KKR has the capital. They just announced the final close of their North America Fund XIV at $23 billion. Plus, they just offloaded CoolIT to Ecolab for $4.75 billion. They are flush.
Honestly, I respect the Bundt cake deal way more than Walgreens. At least the cake margins are real. People buy them for every office birthday.
True, but if we are talking about high margins and corporate makeovers, the whispers coming out of the beauty sector today are getting incredibly loud.
You are talking about the Estee Lauder and Puig rumors.
A massive, predominantly stock-based merger. We need to tear into the structure on that. But first, we should probably check in on Gilead's endless waiting game with Arcellx. Spill the tea. So the beauty industry whispers are getting entirely too loud to ignore at this point.
You're talking about Estee Lauder and Puig.
Exactly. Word on the street is they're advancing talks on a massive merger. And here's the kicker. It's reportedly a predominantly stock-based deal.
See, that's exactly where you lose me. Predominantly stock? Have you looked at Estee Lauder's chart lately? Why on earth would the Puig family accept paper right now?
Because it's a massive legacy play. You combine Estee's global distribution muscle with Puig's ultra-premium fragrance portfolio. Think about it. Charlotte Tilbury, Rabanne, Carolina Herrera, all under one roof. The synergy narrative practically writes itself.
Nate, you sound like a pitch deck again.
I can't help it. The banker brain is permanent, but you have to admit the scale would be incredible.
Synergy is just a cute word for we overpaid and now we need to fire middle management. I'm just saying a stock deal in this specific market environment requires a staggering amount of faith. Show me the exchange ratio, then I'll buy the rumors.
Fair enough. You want the hard data, I want the corporate theater. Speaking of drama that just won't end, what is actually going on with Gilead?
Oh, the RCLX tender offer. They just extended the expiration date. Again.
It's the ultimate waiting game.
It really is. They're just letting the clock run, filing the procedural footnotes, and staring each other down. Honestly, the pharma waiting games are putting me to sleep compared to what's happening in retail right now.
You read my mind. Which brings us to the actual $10 billion elephant in the room.
Are you ready to talk about the massive private equity makeover happening at Walgreens? Tomorrow's radar. I'm obsessively refreshing the SEC feed tomorrow for the Orinia and Kezar integration filings.
You and literally 3 other people on Wall Street.
Hey, the devil is in the restructuring costs. But fine, what's actually on your radar?
The beauty aisles. The whispers about Estee Lauder and Puig are getting incredibly loud. We're talking a massive, mostly stock-based merger.
I just don't buy that structure. Estee Lauder's stock has been absolutely hammered. Why would Puig accept paper right now?
Because they get a massive premium on the exchange ratio. It's classic banker math. You sell the recovery story.
You sell the hallucination, you mean? I'll stick to hard deadlines. Gilead just extended their tender offer for RSLX again.
The never-ending waiting game.
Exactly. Also watch the mining sector. Allied Gold shareholders officially rubber-stamped the Z-Gene takeover, so that domino is finally falling.
Gold, makeup, and delayed pharma deals? Sounds like my ex-wife's weekend plans.
We're cutting your mic. Catch you all tomorrow.